Hey guys, my name is Eric. I am a finance manager at a major tech company, and welcome to the Personal Finance Diaries. Here we talk real money, saving, debt, and smarter financial decisions. Today we're going to break down why you should or should not go into debt relief, what are the ways and steps you can take to get the best debt relief possible, and also to understand and key watch outs that you can look out for when you're starting this process. This process can be quite overwhelming for a lot of people and scary, honestly. So my hope for this video is to really guide you on what are the steps that are needed to be taken in order to do a possible debt consolidation or debt relief. What are some of the comparison sites that you can use to get the best deal and ensure you're making a good financial decision for your future? Okay, so starting out, I really like to just break down the numbers on a clean spreadsheet. So I'm gonna make it super simple, and hopefully this will help you when it comes time to getting some debt relief and to also understand whether you should get debt relief. So a best example that I can think of someone who might need some debt relief is, let's assume you have a lot of different kinds of loans. Maybe you have student loans, right? We'll start with this. I'm gonna say types of loans, and we're gonna list them out here. So you have student loans, maybe you have credit card debt, right? You have loans maybe across multiple credit cards. That could be a good example. This doesn't have to be your example, but just for the case of this video, right? We're gonna just showcase what are some of the things that you could have. Maybe you have a car loan. Maybe you have a just a personal loan that you got because you were struggling with something going on in that current moment. So these are all, some of these kinds of loans that you could have. And then here I'm just gonna have an amount, the amount of debt that you have, right? So let's just assume you have $50,000 in student loans. Credit card, you have $15,000. You have a car loan, which is, call it $30,000, and a personal loan, maybe it's just $4,000, right? We're gonna go ahead and make this dollars, just so it's easy for us to analyze. Take away those decimals. So let's assume you now have a combined $99,000 in debt. Well, what matters here is really the APR, which is not the same thing as an interest rate. Quick breakdown difference between an APR and an interest rate. An interest rate does not take into account any fees that come with the lender, right? The lender might charge you an origination fee for starting up the loan. And in that case, the APR encompasses those fees, while the interest rate is just, it does not take into account those additional fees that might get added or taxed to your loan. So we're gonna talk in terms of APR here, and let's just assume that your APR for a student loan is maybe, call it like 9%. Then you have credit card debt is typically very high. It's like 27%, right? Let's put this. Car loan, maybe it's a little bit lower. It really depends on your credit score. Let's call it 8%. Then you have a personal loan. I've seen this, this varies a lot as well. Now, before I go into anything here, your credit score is super important, and you wanna make sure you do things the right way, especially when you're going through debt consolidation, that you pay attention to first, the kind of credit score that you have, and two, how you're applying for these different loans. Because the most important thing you have to do here is actually understand what the market is willing to give you for the amount of debt that you have. You don't want to go in and start applying for a million different loans with individual sites, because one, it's going to be annoying, it's going to be time consuming. They're going to all try to call you. I've had this experience. Everyone's calling you, trying to give you a proposal. A lot of the times, depending on how you do it, you might actually go through a hard inquiry, which means like they're actually checking your credit report. You don't want that, because that actually reduces your credit score. And the lower your credit score, the higher the amount of APR that you're gonna probably get charged, right, on this debt, or the amount of interest that they charge you. So please be careful with that, and make sure that if you're looking to get some kind of debt consolidation, ideally try to do a few, you can look this up online, but there's so many different ways you can try to kind of temporarily increase your credit score. That's not the purpose of this video, but definitely it's important to have a pretty good credit score ideally, so you can get the best rate, or try to increase that as much as you possibly can. Okay, and then I'm gonna make this super simple, and we're just gonna put this, the amount of the loan, really, it varies. Like how much you're gonna pay varies on how long the term is. So if this is a 30-year loan, it's gonna be very different from a 3-year loan, right? Like a car loan was usually like 3 to 5 year loan, right? If this was like if I had a mortgage in here, this would be like typically 15 or 30-year mortgage. Student loans, you know, can vary, like credit card debt can vary. So I'm not going to get into those specifics because then this is going to be too complicated for the purpose of this video. So instead, what I'm going to show you is how, in a simple term, right, you can just multiply the total debt amount times the APR. And this is approximately what you're going to be paying per year for this specific debt that you have. Now, if we sum this in, I think I should just be able to do this. You are paying on a $99,000 debt. You know what? I like round numbers, so I'm gonna make this 5,000. Now we have 100,000. So on a $100,000 debt, you are paying around $11,450 in interest and fees. Okay. Now, what this represents in terms of the total is about 11% is what I see here. Let me just put this. Is about 11.45% is the average APR that you're paying on your total debt. Now, you see this and you say, okay, I have all these different kinds of debts. What's the best approach I can do? And what's the reason for wanting to consolidate this debt? Well, imagine if you actually have a bank or institution or a lender that is willing to take this entire lump sum, this $100,000, and give you a better rate. Maybe it's 7%, right? Let's say a mortgage typically right now with good credit score will give you is about 6%. This will change depending on when you watch this video, but it's around 6%. Maybe a little bit more, maybe a little bit less, varies on a lot of different factors, but let's call it simple 6%. Well, if you can find a lender that's gonna give you less, anything less than this 11.45%, then it's worth it for you to actually proceed with some kind of debt consolidation, which basically means that instead of you having 4 different kinds of debts, you just have one debt. And this one debt is with this lender. And this lender, you owe them now $100,000, and they're gonna give you the $100,000 right away. So let's put this here. Actually, I'm gonna put this like this, and I forgot a 0. So hopefully, I wish it was 10,000, but it's 100,000. So $100,000 debt that we have here with this lender. I'm just gonna say lender XYZ. Okay, and we'll bring this. Whoops, and we will bring this up here. Okay. So now instead of having 4 different kinds of loans, you have one loan with one lender, and this lender maybe will charge you 10%. And so now you can start to see, hey, like this is so much better because instead of paying $11,450, you're gonna pay 10 grand, right? You're gonna save yourself $1,000 per year on all this debt. Now, of course, this is very simple explanation. It definitely varies what kind of situation you have with the lender, what kind of term you have with all these different loans. So a lot of things, some of these loans don't allow you to do like a prepayment, or they will charge you extra fees for paying it off early. So you really have to take that into account when you're going through this process. And so again, that's why you would want to do a consolidation. You want to make sure you do your research before you go into this, but a debt consolidation can be very useful and save you a bunch of money. This is one example, but let's say the credit card debt was actually higher. Like you could easily have 40,000 here. Well, you'll see how the equation starts to change because the credit card debt has such a high APR. Now we're talking 14%. Now just this 10%, we're talking an $8,000 difference. And this is a bit different because now this is, let's link this to the total. That'll be smarter. So now if we do the subtraction, you're saving almost $6,000 just by getting into a new loan. Resolving, you basically, like just in simple terms, what you would do is the lender would give you this $125,000 and you would go in and just pay off all this debt. And now you only have debt with one person and one lender. Now, usually not a person, a company. So now that I kind of broke down what it looks like to whether first, if it's worth a good situation for you to actually do a debt consolidation. And then second is like, okay, now how do we break down what the best loan or what the best lender is to go for, right? Because you don't want to go in and start applying to a million different loans with different companies. You want something, you want a kind of a comparison site that will allow you to get a good glimpse of what the market can offer you for your credit score, for the amount of debt that you have, and do some soft inquiries on your credit report, not hard inquiries. Soft inquiries mean basically that it won't affect your credit score if you apply for this, and it's kind of like a pre-qualification. That's all it is. You're not actually applying directly for the loan. Now, one last example I'll say before I go into the other thing is that you don't necessarily have to have a bunch of loans. Like you could technically have one loan, but if that loan is with a credit card company that is that's charging you 27%, there's really a lot of value in doing a debt consolidation where you can just say, like, you basically flip the loan. Instead of having the loan with this credit card company that's charging you 27%, you can have it with a specific lender that can give you a better rate, something like that, right? Again, varies on the lender, varies on the kind of loan. There's a lot of other factors that we're not going into detail, so please make sure you do your research before you do anything. All right, so now that you understand why you might need to do a debt consolidation, let's break down exactly where you should go next, right? How do you ensure you get the best deal possible? How do you compare different lenders between each other? So there's actually a lot of sites out there that help you compare these different things. One of them is Credit Karma. You have Bankrate is another one. You can see they have a bunch of different things: personal loans, credit cards, home refinance, right? You have a very popular one is NerdWallet. In this example, obviously you can compare credit cards, kind of would look the same thing, but with loans. So I can even click here. They have auto insurance. So these are the kind of websites. One of my favorite ones, and the one I'll actually be covering today, is Best Money. And actually, let me start from the beginning of Best Money. So you go into Best Money website and you'll see there's a bunch of really cool options on different kinds of loans or financial instruments that allow you to have a better financial future potentially. So starting with mortgage loans, car insurance, online banking, here the same thing, kind of credit cards, life insurance, pet insurance. And what we're gonna get into today is debt consolidation. So you can click on this. The best part about this is it really allows you to go in and compare different debt relief companies that are available with their rates. So you don't actually have to waste time going one by one, trying to find one, calling them, submitting an application, messing up your credit score. Instead, you go here, you tell it exactly what, and you can kind of scroll down. This one, is kind of, you say how much your debt is. But you scroll down a little bit more, it actually allows you to customize, and it says, okay, you need help finding the right lender for you. I'm gonna say yes, okay, cool. Let's say in our case, we had more than $15,000 of debt. What do you need a loan for? We can just say debt consolidation in this case. And then it asks you between a secured loan or unsecured loan. Basically, it says it right here, so it breaks down everything. But secured loan requires collateral, so you need to put your home up as collateral, or a car, which basically means if you don't pay the loan, they would take that asset from you. So we're gonna just say not sure. And then this is another important part, is what's your credit score? So you could say, hey, like, I have a fair credit score, I have a good credit score, and that would kind of give you a better understanding of the rates that you would actually land on. So we'll start giving, based on your answers, we recommend Freedom Debt Relief. And so you can go here and it'll break down a lot of the cool details. Of course, you can click that and get my rate. They have something called a Best Money score, which basically ranks them on popularity, brand reputation, and the benefits and features that come with it. And you can actually go in and you see that has a little toggle there to look at the editorial reviews. That's huge because you can really get a breakdown on what are people saying and what is a deep dive into this company that I'm about to get into a debt with, right? So it really makes you feel safe about it, understand their reputation, and then if other people are using it as well and having success with it. Here you can actually breaks down the pros and cons between why this company might be good for you. Of course, all these companies actually they have a partnership with these debt consolidation companies, right? Like it's almost like an affiliation kind of program, right? So you have to keep that in mind, of course, but they always want to make sure that they're providing the best value to their clients. And there are specific ad-supported ways to make money off of this. So I just wanted to throw that in there. The other cool thing is it actually tells you what is a debt consolidation loan, what are APRs, and how will lowering one help us, which I covered that already in the beginning of the video. How it works here, you can kind of break down similar to what I had showed. And then these are some factors that you need to take into account when you're looking at different loans. Flexibility, very important, access to experts, and lower interest rates or APR. So this really allows you to view what is possible and get a rate really quickly from a bunch of different places. I can actually go here and show you like even a personal loan. You can compare all these different kinds of loans. I'm gonna say no for now for this, right? And you can say, hey, I need a debt consolidation loan. It is for $100,000. I make 50 grand and my credit score is, let's say it's good, right? All of a sudden, I'm able to go here and actually see the APR that these companies are charging. So here you see it goes from 8% to almost 35% with all discounts as APR. So that means that it's taken into account any fees that SoFi might be charging on top of that. And so of course, then you have the loan term, which will make the big range, right? Like depending on how long the loan is, then the longer the loan, the smaller the monthly payments that you'll have to make on this debt, but then the higher amount of interest total paid in the term of the loan. So something to consider as well. And then here you can see 6%. So now I'm starting to say, okay, hey, this is 6%, way better than what I had shown in the spreadsheet here of almost 15%. Why don't I apply to something like this? You can get my rate. It is a soft credit check to your credit score. And so you get to prevent any drops in your credit score, and you get a good idea of what the market can offer you for your profile. Here actually Best Money breaks down a little bit more of how they calculate their total score. You have your editorial reviews on all of these different companies. And then of course, they actually break down what their best overall choice is. You can compare what one might offer versus another. And it just really breaks everything down for you, and it will save you a bunch of time. So hopefully this video helped you get a better understanding of whether you first should get a debt consolidation of some sort based on your personal financial situation. Then it also gave you a breakdown of what are the different debt consolidation or debt comparison sites out there and which ones are the best ones to use. And then most of all, hopefully it gave you a little bit more background on the different rates possible, how much money you can actually save if you go with one of these debt consolidation companies, and then the importance of being able to compare all of them, not affecting your credit score, and having a good understanding of where you're at in the marketplace and what kind of loans that you can actually get. Of course, the really cool thing about Best Money is the transparency on how programs are scored or ranked, whether the platform discloses affiliate relationships, which is something that Best Money does really well at, being very transparent and clear on that. The breadth of program types covered, you saw that Best Money offers a variety of different debt types. So that is super beneficial. And once you're in that platform, like, you'll get comfortable with it and you're gonna be able to pivot to different types of debt, no matter the situation. And then of course, the cool part is that you can filter for your situation, your credit score, the amount of debt, and all those different kinds of things. So it really helps you narrow it down and get to ultimately the best choice for your situation. Thanks for tuning in to the Personal Finance Diaries. If you found this helpful, make sure you hit the subscribe button, click the like button. We love making these kinds of videos, and hopefully it helped you and it's gonna help you drive a better decision when it comes to your debt. So tune in next time. We will see each other soon.